This week, are overall reverse mortgage volumes as low as they appear? Apparently not, according to a recent report that reveals that proprietary reverse mortgages now make up a significant portion of our overall loan production. We'll dive into all the details right after this short message from our sponsor.
Liberty Reverse wants to help you grow your reverse mortgage business with our proprietary Equity IQ product suite. Equity IQ gives your borrowers access to more funds, lowers their upfront costs, and expands eligibility for home purchases. Learn more at partners.libertyreversemortgage.com today. This ad is intended for mortgage professionals only and is not a consumer solicitation. PHH Mortgage, doing business as Liberty Reverse Mortgage, is an equal housing lender. NMLS number 2726.
Welcome back and thank you for joining us. Reverse mortgage loan volume has fallen markedly after the HECM refinance boom of 2021 and 2022. However, the number of HECM endorsements in recent years only reveals part of the story. With ongoing product innovation and a shifting mortgage landscape, diversification has become the new playbook. Proprietary or private reverse mortgage offerings are not only on the rise, but now account for a notable share of overall reverse mortgage volume. Housing Wire's Reverse Mortgage Daily reports that NewView Advisors soon will be publishing a quarterly report that tracks the production of proprietary reverse mortgages. In September, private reverse mortgages accounted for 40% of overall reverse mortgage loan volume when measured in dollars, that according to data from NewView Advisors. But what we don't know is the number of proprietary reverse mortgage loans that have been closed, so we can compare them to the number of HECMs endorsed in the same time. But it wasn't long ago that proprietary loans represented just a fraction of the overall market share in the reverse mortgage space. In fact, in 2022, private reverse mortgages accounted for just 15% of the overall market. However, as HECM volumes have continued to stagnate in the wake of refinancing of HECM loans, the pace of new proprietary reverse mortgage loan offerings has accelerated because necessity truly is the mother of innovation. NewView Advisor data confirms the increasing role of proprietary loans in the reverse mortgage lending space, and they report that in the first 9 months of this year, proprietary loan volume was at $1.8 billion, while HECMs accounted for approximately $3 billion during the same time period. Now, there are two caveats to weigh when we're evaluating the impact of private reverse mortgages. First is that proprietary loan amounts are going to be notably higher than HECMs, as they have a loan cap that will far exceed the HECM limit, and that increases the amount that a homeowner may borrow. And second, without determining the number of proprietary loans that have been closed, it's going to be impossible to measure homeowner demand and acceptance of one loan over the other. Yet when we stop, all things considered, the pivotal role of proprietary reverse mortgages, it can no longer be ignored because lenders are pivoting to meet market demand. So, what are the key takeaways for reverse mortgage professionals from this emerging trend? First is that lenders are unlikely to find pronounced growth solely by focusing on HECMs. And furthermore, reliance on HECM refis in a low-rate environment is not a strategy for long-term growth. Second, lenders and originators must move beyond the typical needs-based borrower, focus somewhere else, for example, to the mass affluent borrower who has a high-value home and also needs customized solutions to help meet their retirement goals. And third, the HECM is likely to face increased regulatory scrutiny and product changes in the future, as evidenced by HUD's recent request for information that was posted to the Federal Register. HUD's notice is entitled Future of the HECM and HMBS Programs and Opportunities for Innovation in Accessing Home Equity, and it looks at several potential ways to enhance the HECM program and also the secondary market. And those considerations include, in part, expanding the requirement for lifetime expectancy set-asides, modification to payment plans, and HECM to HECM refinances. Now, against that backdrop of change, lenders have wisely chosen to diversify their product portfolio and market focus so they can meet the needs of a broader range of older homeowners. But what can originators and brokers do to best prepare for this market? One is to get up to speed on the current proprietary reverse mortgage offerings and to see what client profiles they would best serve. Then you want to identify those high-value homeowners that are in your database or CRM right now that may be attracted to features that are not found in the HECM. And third, proprietary deals often depend on referrals. And knowing this, strengthening your relationship with area professionals will be crucial. In short, the dark horse of our industry is no longer hiding in the shadows. So if home values remain relatively stable nationwide, proprietary reverse mortgages are poised to shape the next chapter of reverse mortgage lending, steadily capturing a larger share of the market. The HECM does remain the backbone of our industry, there's no doubt about that, but an evolving landscape demands flexibility, innovation, and a willingness to serve borrowers outside of the HECM sandbox. Now, what are your thoughts? Leave your comments in the comment section below, and if you would share this video on LinkedIn, we thank you for that. We do have a YouTube channel. Be sure to subscribe. That way you never miss any of our episodes. And each and every week, you can catch up on the latest reverse mortgage news. We curate some very unique stories here. That's HECM World Weekly. You can watch or listen, and listeners can listen and subscribe on Apple Music and Spotify. Thank you for joining us, and be sure to return next week for more reverse mortgage news, commentary, and analysis you'll only find here at HECM World. Have a great week.